Hey traders, Akil Stokes here of Trade Empowered, and welcome to this week's weekend review video. You're not going to see my handsome face this week because I'm doing some construction, I guess, or I'm redoing the office, and it looks pretty bad. So it's trust me, it's better you don't see. But I'm still going to give you the same great content. Now this week we're going to go kind of back to the basics. I'm going to give you some. I'm going to show you some recap videos of what went down in our live day trading room this week. And I can honestly say that for the first time, it was a very, very positive week. Both the morale of the traders, actually the morale of the traders have been very good, but through January and February, it's been definitely a grind day trading. And this week, things finally got back to normal with a very good week of trading. Which is how it should be, which is what we're used to in the live rooms. It looks like we're finally getting over that hump. On the swing trading side of things, had a very good week as well. I don't have a pip count for you, but we did have I did have a pretty good swing trading week. Looking at about 1, 2, 3, 4, 5, 6 trades that got filled overall, with 4 being winnings or 4 being in profit and 2 losing. And looking at the equity curve, you can see that I'm basically right back up, putting a double top in with the equity highs that I achieved in January. So that was the goal. Remember, we had a little bit of drawdown in February, which was expected. And the more time you trade, the more and more you get used to it. But we had a bit of a drawdown in February. We consolidated about a week or two ago, putting in a nice little channel, a nice little shelf. We achieved new structure highs, bounced off that shelf, and now we're testing previous structure highs. So just like any trend, what I'm expecting right now is hopefully putting a higher high, higher close, and well, that should tell us that we're going to be in trend continuation as far as the equity curve goes. I know it sounds crazy comparing the equity curve to the market, but you know, when you get a chance, give it a try, either with your back testing or your actual trading. You'll be surprised at how similar they actually are. So here's a flashback of some of the sessions from this week's live room. Really quick, I want to tell you guys, live room members, this is March 6th. There is going to be no live room tomorrow morning. Something came up that I actually had planned 2 weeks ago, and I forgot about it until I was reminded last minute today. So I'm not going to be able to see you guys tomorrow. It's non-farms day anyway, so you know how that goes. We watch the fireworks show for the first hour, and then the market kind of just messes with us. But usually that's a very good day for question and answer, a really good day for thought process and really getting some education down instead of, you know, checking out this chart and looking at this chart and going over this trade and looking at that setup. So I apologize for that, but we will be back Tuesday for our normal time. So check it out. Here goes some of the sessions or some of the recap sessions from this week's live room, and I'll see you guys in a little bit. Okay. Let's back things up for 1 second before we get into some of the recap videos. I want to show you guys something. Now, this is a Starbucks, the stock of Starbucks on the weekly chart, and I bring Starbucks up mainly because, and you guys that know me, I like to do stocks that I know. Some good family friends, one of my wife's really, really good friends works at Starbucks, so we're always getting free chai lattes and free mugs and hey, try this and do that. So Starbucks is constantly on the mind here in the Stokes household. And you know, as usual, when I get bored, I like to look up some stocks. There was also the whole dumb Starbucks thing going on, and I knew the stock was dipping. And well, I took a look at it, and this is gonna provide an excellent example of how the skill of trading is not just for Forex. I know I mainly focus in the Forex market because that's what I day trade and that's what I swing trade. But you can use these skills in all types of different markets. They're universal. And here's a great example. I'm on Starbucks weekly right now. You can see we're dipping off the highs of about, 82 up here. What do? We came right back down into structure support down here. Boom, the market pushed up. Got a little retracement back here, then pushed higher. What do we do right here? Very nice candle right here. Bulls tried to push down, got rejected, came back up, double bottomed on the weekly. We're shooting up right now, potentially putting in a bullish engulfing candle. So a double bottom with RSI divergence, look left, structure leaves clues. For an investor, someone that's looking to get long Starbucks, boom. Here's your first opportunity right here. Loading up orders. If you're looking for a next opportunity, I would say right here at previous structure. And then a last ditch effort, a great buying opportunity, either right here at $51 or, you know, if we touch these 42 lows. So a great way that even if you're not doing patterns and stuff like that or day trading, you can still use these clues on the higher time frames on different markets to get ideas of where is the best place to buy or where is the best place to sell. We can even take this down to a 4-hour chart, more of a swing trading time frame, becoming more of a trader and not an investor. And well, you've got about 3 patterns sitting here right now. You've got 4 if you count the 2618. But you've got about 3 patterns sitting here right now. Not going to take too much time on them, but if we draw out an X to A to B, B to C, C to D, we're looking at a cipher pattern completion about right here, about 77.60. So right under $78. We can also draw in. Let's change the color of this. Let's make this one purple. We have a potential butterfly pattern starting at this B leg, looking at an X to A to B, B to C, a C to D extending to that 127. So a little bit above that cipher pattern completion, 127, right about there, right about 78.14. And then lastly, we have a potential Gartley pattern as well. If we do one more, make this thing even more colorful, looking at our total swing, X to A to B right here, B to C, C to D, going to complete the same areas of our cipher. That's 786 and that 127 extension. So you can see a pattern trader as well. If you want to be a trader on these things, come down to the lower time frames, not necessarily lower time frames, but lower than the weekly chart, and we've got 3 patterns lining up in the same area for a short entry. So whether you're long bias, short bias, it doesn't matter. You can use these pattern recognition skills and just the overall skills of knowing how the market moves, knowing what structure is, how to identify it. What does a break and close above or below structure mean? What does it mean when a structure level holds? Those skills are very important no matter what type of trader or investor you are. Again, if you don't know the basics, how can you expect to do anything fancy? Or how can you expect to do anything, lost for words right now, but anything yeah, I'm going to stick with fancy because my brain's shutting off right now. So wanted to bring this up on Starbucks before we got into those videos. Now we'll continue with our regularly scheduled program. Okay, gang, so Tuesday was a pretty dull day, but we did have one trade on the table that got triggered. And I'm a little late recapping this because I had to leave for a meeting right after live room closed. But what you see in front of you, once I delete all this stuff, we'll talk about that later. What you see in front of you is a Gartley pattern completion. And this is actually a 222 Gartley. And there's a lot of different ways you can trade Gartleys, but this is quote unquote the perfect Gartley setup. Again, where you can see the market comes right down to the 127, a 786. And if I were to draw an ABCD pattern completion on there, all 3 of those factors align at the same mark. Now, this was a trade that we had on in the live room. Unfortunately, I personally did not get filled as the market didn't get down here until after the room was closed. I can't speak for my live room members, whether they kept their trades on or removed them, but I didn't have a chance to make profit off of this. However, this was a good example, or this is a good follow-up to a good discussion we had in the live room today about the aggressive C trade. And well, that topic can take up a long time, but essentially the aggressive C trade is trying to hop on an advanced pattern instead of at the D leg and playing the completion, trying to hop on and trying to hop on in advance and trade the C down to the D leg. And I want to say this up front. The aggressive C by itself is a really dumb trade. I would highly not suggest going in the market and just trying to trade the C leg of each pattern because, well, you're going to see a lot of ABCD patterns and you're going to see a lot of other stuff that's going to cause you to go broke pretty quick. And if you're going to take that route, you might as well just, write me a check for your money. I can find better things to do with it. But for those traders that are looking to play that aggressive C because the risk reward is so good, what I encourage them to do is instead of looking at an aggressive C, look at it as a trade setup within itself that happens to complete at the C leg of a advanced pattern. That's what we had today in the live room. I'm going to try and make this as quick as possible. We had a 2618 trade. We had the market come up here. We double topped right at this level. We came down. We created a new structure low right here, and then we came back up to retest that double top. It was at this point where I got short the market, actually rode down profits to this level right here, a retest of our structure lows, and I did get stopped out for break even on the remainder of my profit. So I didn't have a chance to ride this down, but using a technique like this is a great example of, you can see how you can potentially take some profit off the board. You always want to do that. Put some money in the bank or in your pockets, and then ride down the remainder of that profit to a potential D leg of, say, an advanced pattern before stopping, reversing, and trading it on the way back up. So again, it didn't work in this scenario because the second half of my position was taken off with trail stops, but you can see how this tool can be very useful for those looking to trade that C leg of an advanced pattern. Well, the hot streak continued on Thursday. In fact, it was so hot in the live room that I actually blew a fuse in my house towards the end of the session. But we did go 2 for 3. I'm going to start off showing you, I'll go through the 3 trades we took. It was an interesting day. We had the ECB decision in the morning, and then Draghi spoke, and then we had some ADP numbers come out for the US as well. So what I did was I really just took a back seat for the first half an hour to an hour of the live room. If there's one lesson I learned, and it's know what news moves the markets. And you guys know I'm not a fundamental trader. I don't really base any trading decisions off of news events, but I do make sure, especially with my day trading, I do make sure to understand which news events have an impact in the market. And I know that ECB press conferences do because, well, you learn from past experiences. And I got eaten alive the first quarter, the first half of last year, trying to trade through these ECB press conferences. So what I did was I made a change in my my trading plan. I said, hey, non-farms, obviously I don't trade. ECB press conferences, I wait and see what the market does first before trading it. And well, we whipsawed up and down, avoided it. And as the market settled down, we went down to the range bar charts and really looked for a few trading opportunities. Now, this is going to be a really nasty looking one right here, but we had a bat pattern here on pound yen, looking at an X to A, A to B, B to C, then a C to D pattern, or C to D completion up here, and you can see that roll down to get a target 1 hit. We also had 2 different trades one on pound dollar 5 range and one on euro dollar, both kind of hedging each other. The euro dollar was a short position, the pound dollar was a long position. And I do believe in correlations. However, I don't let them affect my trading. So here's what we had on pound dollar. If where are you at, pound dollar? Pound dollar was a long, so let's see. Again, all right, here we go right here. Gartley pattern on pound dollar. We're looking at an X to A down here. Boom, X to B, bat pattern, excuse me. B to C. Let's try that again. B to C coming up here, and then a C to D completion right down here at, looks like we just must have hit that 886. Yeah, just hitting that 886 and actually a little above it. And for you guys that follow me, you know I front run my orders by a few pips just for this reason. Again, I don't want to wait until that 886 is hit because, sometimes we're going to get right before it. Sometimes we're not going to get filled. So I always want to have my orders a few ticks before that. In this case, it was 66.94, and I just got filled on this. And you can see rolled up to target 1 easily and target 2 up here at a retest of our structure high. So a nice winner on pound dollar. On the other side, took a pretty significant loss on euro dollar. We spiked up from the news this morning. You can see we went all the way from essentially 37.42s, bang up to 38.30 something. It's almost a 100 pip move, and we start to consolidate a little bit at this structure level. So we did some higher time frame analysis, went up to our 15-minute chart, and we identified this structure level right here at this red line. What happened was, as the market approached that level, we zoom in some, you can see that the market spiked past it, got rejected, retraced off of it, came back up to give us a nice double top right here. So what we did was take a double top short, a CTS based trade. We had double top, we had structure, RSI divergence. We ran through the whole CTS checklist, but we took a short position right here in hopes that we get a retracement back down. And you can see the market just blew right through it and stopped us out right before this 38.50 level. So again, do I mind? No, I know I'm about a 55% trader, so I'm going to take a win here, a loss there. This one had a little bigger ATR than what I would have liked because of all the movement we saw earlier in the day, but the win on pound dollar made up for this loss, and then the win on pound yen put us over the top. So we're still able to end with a pretty profitable day, and we'll see what happens tomorrow with the non-farm payrolls coming out, but should be a pretty profitable week as well, having all those winners come off of yesterday's trades. Now, lastly, before I let you go, I want to share something that's very important, and it came to my attention that many of you didn't get this. But if you head over to Jason Stapleton's YouTube page, you may or may not see this depending if you got the link or not. But there's a video he put up, a special interview with a trader that came through our courses, one of our courses, and is now trading hedge funds. So now he's a hedge fund trader, and he's probably super embarrassed that I'm putting him out here to the world. But sorry, David, sorry. You gave a great interview in this week's private client group meeting, and they're a great feedback, and I think it's just important that every trader checks this out. Now, more so, what you're paying attention to is don't look in it for different methods and stuff like that, but mainly look at the struggle, look at the journey that this trader went through, and you should be able to see a lot of things similar to your own trading. What he had to overcome as far as psychology, how did he put himself into position to be trading hedge funds from being really an average Joe. He gives a few book recommendations at the end of books that he recommends you guys reading that will help in your journey. It's a very good interview to see another example of an average person really. He doesn't like me saying becoming successful in trading, but on that path of continued success in trading. Hope that works for you, Dave. So check it out. I'll throw the link up underneath this video as well, because I think it's a private or unlisted video, something like that, but I think it's very beneficial. It's about an hour long, so check it out while you're doing some back testing or you're doing some higher time frame analysis, but I do think it's a must see for everyone out there. So thank you guys for joining me this week. I will see you guys on Tuesday, syndicate members. I will see you maybe tonight if I do some analysis and find something, but I'll see you next time something hits my radar. And as always, plan your trade your plan. You guys have a great weekend.